Good morning, good afternoon, and good evening. Welcome to the 33rd Hodlnots Weekly Warm-Up. I'm John.
I'm Vicky.
Let's get into some of the crypto news making headlines over the last couple of days.
So, surging oil prices and inflation data might rattle the crypto market this week. So, we all need to take note of that. And a busy week lies ahead with all eyes on oil prices and key inflation reports due out of the United States economic calendar. So the crypto market saw another red Monday, unfortunately, this morning, as digital assets erased last week's gains and returned to their sideways channel, which actually John will show you in just a moment. And the only thing really going up at the moment is oil prices, with crypto, commodities, and US stock futures all falling today, this morning. Crude oil prices have skyrocketed to $116 per barrel as oil futures opened higher on Sunday evening. And this resulted in major volatility in stock futures and the crypto markets, which are falling at the moment. So President Donald Trump said oil prices will drop rapidly when the Iran nuclear threat is over, adding that this is a very small price to pay. So John will show you the Bitcoin chart in a moment, and we'll see what's happening with that.
Absolutely. Now, speaking about Bitcoin, it's speaking about relationships finally ending. Bitcoin's 12-year relationship with the dollar just broke. Now, historically, Bitcoin's price has fallen every single time the dollar has rallied since 2014. When the dollar index spiked to 114 in 2022, Bitcoin dropped from 47,000 all the way down to 16,000 over roughly 11 months. Now, the inverse relationship between Bitcoin and the dollar was so consistent that traders built entire strategies around it. Now, however, on March the 3rd, the dollar hit a 3-month high at 99.4 in terms of that dollar index, while the Nasdaq 100 dropped 1% and gold fell 3.6%, but Bitcoin didn't flinch, holding above 68,000 as $1.5 billion in fresh ETF capital flowed in. More on that a little later. Now, Bitcoin showing this kind of resilience when the dollar surges and stocks and gold both drop is nearly unheard of across its 12-year trading history. So, what caused this shift in the Bitcoin and dollar relationship? And could this be the turning point for a Bitcoin recovery? Well, we don't know. We have no control. We know a lot of geopolitical events. We trade what we see. More on that later.
Yes. And more, well, interesting news out of the US. So, a US court has dismissed terrorism charges against the world's largest crypto exchange. So, a US court has dismissed a terrorism lawsuit against the world's largest crypto exchange, which is Binance, which was filed by victims and relatives of 64 terrorism attacks. So 534 plaintiffs are the victims and relatives of victims of terrorist attacks carried out by groups such as Hamas, Hezbollah, the Islamic Revolutionary Guard Corps, Al Qaeda, the Palestinian Islamic Jihad, and ISIS between 2016 and 2024. And the lawsuit claimed that Binance deliberately violated sanctions and anti money laundering, countering the financing of terrorism, which effectively led to hundreds of millions of dollars getting poured into the coffers of terrorist groups. So the defendants were Binance and their founder, former CEO CZ, and Binance.US operator BAM Trading. But Jeanette A. Vargas, the U.S. District Court, the judge for the U.S. District Court for the District of New York, dismissed the lawsuit on March 6, ruling the plaintiffs failed to plausibly demonstrate that Binance's conduct aided specific terrorist attacks. So there we go.
Yeah, there is a lot of talk around that on the socials as well. Yeah, we'll get back to you guys as more of this develops. But for now, let's leave the planet. Why? Because there's an orbital data center company that is starting to mine Bitcoin in space. Now, StarCloud, an NVIDIA-backed orbital data center startup, said it will start mining Bitcoin from space later this year, when its second spacecraft is launched, positioning it to become the first company to mine Bitcoin off of Earth. Now, StarCloud will be the first to mine Bitcoin in space, the startup CEO Phil Johnson said on X on Saturday. He said that running Bitcoin application-specific integrated circuits, known as ASICs, right? Application-specific integrated circuit. These miners would be one of the most compelling use cases of space computing due to it being significantly cheaper than GPUs. GPUs are about 30 times more expensive per kilowatt or per watt than ASICs, Johnson said. A 1 kilowatt B200 chip might cost around 30,000 US dollars. A similar 1 kilowatt ASIC is like $1,000. In the X post, Johnson said that Bitcoin mining in space will become a massive industry due to how much more economical it is than mining the cryptocurrency on Earth. Bitcoin mining consumes about 20 gigawatts of power continuously. It makes no sense to do this on Earth, and in the end state, all of this will be done in space. Now, StarCloud was founded in early 2024 to build data centers in space as a solution to address rising energy needs for AI. In November, it launched a satellite with an NVIDIA H100 into orbit, marking the first time a GPU that powerful has ever operated in space. Now, this company, StarCloud, its data centers, which comprise about 88,000 satellites, are primarily powered by solar energy. So you have up in space, a lot closer to the sun, solar energy, and running those ASICs, they're going to be able to mine Bitcoin in space. Interesting times, Vicky.
Yeah, it is interesting times, actually. I'd like to follow that story to see if it actually happens.
Mm.
But another coin we haven't really heard a lot about recently is Cardano, which is ADA. And they are now accepted at the Swiss Spar supermarkets, which is interesting because we've heard of a lot of other coins being adopted and being able to be spent in stores, and now ADA is in Switzerland. So Cardano's ADA token is now accepted for payments at Spar supermarkets across Switzerland after a new integration with crypto payments provider DFX.Swiss. So the development enables shoppers to pay for groceries using ADA by scanning a QR code at checkout and sending funds directly from their cryptocurrency wallets. Transactions are processed through the Open Crypto Pay standard developed by DFX.Swiss, which facilitates in-store payments using digital assets. Under the system, payments are executed directly from the user's wallets and processed in real time without requiring transactions to pass through a centralized exchange. Although customers pay with cryptocurrency, Spar stores receive the settlement in Swiss francs, regardless of which digital asset is used in the transaction. So I love all this main real world adoption because that just gets the message about crypto out there that much faster.
Absolutely, and accessibility as well. Now, bearing in mind that Spar is a global franchise, it's a grocery chain. We have it in South Africa as well. I know it's in Australia, originally originating in Europe, out in the Netherlands, as far as I remember. Now, there are 137 of these Spar outlets or grocery stores in Switzerland. That'd be interesting to see if Spar Global might start to adopt this as well. And what will that do to the ADA chart? Who knows? Not a tip, not financial advice, but very interesting. Now, going back to some more ETF talk in terms of the relationships, as mentioned in the previous story around the US dollar and Bitcoin relationship, is that for the first time in 5 months, spot Bitcoin ETFs have posted a second straight weekly inflow. That's great news. Now, US spot Bitcoin exchange traded funds ETFs recorded their second consecutive week of net inflows, marking the first back-to-back weekly gains in 5 months. Spot Bitcoin ETFs attracted roughly $568 million in net inflows this last week, according to data from Soso Value. The products also posted positive flows of about 787 million the previous week, showing renewed investor appetite after several weeks of sustained outflows. Before the recent turnaround, US spot Bitcoin ETFs endured a prolonged period of investor withdrawals, recording roughly about $3.8 billion in cumulative outflows over a 5-week streak. Now, the biggest weekly withdrawal during that streak occurred in the week ending in January when spot Bitcoin ETFs recorded about 1.49 billion in outflows. Now, in a post on X on Saturday, Fernando Nikolic, Blockstream's director of marketing, noted that Bitcoin ETFs have already matched roughly 15 years of cumulative inflows as seen by gold ETFs in less than 2 years. Now, despite gold having a decade and a half head start in the ETF market, Nikolic added that the milestones occurred for Bitcoin, these ETFs, during a 46% Bitcoin drawdown and several months of negative price performance, arguing that institutional demand remains strong even amid market weakness. He says, anyone still arguing about whether Bitcoin is digital gold is wasting their breath. Bitcoin isn't trying to be gold. Bitcoin is making gold look slow. So very interesting that in, that period of time, Bitcoin ETFs have way outperformed gold ETFs. And lots of talk as well about Bitcoin still perhaps outperforming gold over the next 2 to 3 years. We don't know. We'll see. We trade what we see, right, Vicky?
We certainly do, and we'll talk a lot more about that today and in the coming weeks. The next story is actually, I thought that they could already do this, but apparently not. So back to the US for a moment, and the Treasury in the US is urging Congress to give crypto platforms power to freeze suspicious funds, which I actually already thought they could do because we've heard of stories. But anyway, the US Treasury is urging Congress to consider creating a digital asset specific hold law that would allow crypto platforms to temporarily freeze funds linked to suspected illegal activity. The recommendation has appeared in a Treasury report to Congress on technologies used to counter illicit finance involving digital assets, produced under the Guiding and Establishing National Innovation for U.S. Stablecoins, or GENIUS Act. So we've been talking a lot about the GENIUS Act, and they want to add this to the GENIUS Act. So exchanges actually often detect suspicion funds using blockchain intelligence, but there's not always a clear legal framework that allows them to hold those assets long enough for investigators to act. So this could allow institutions to pause suspicious transfers before funds are moved or converted through other crypto services. So that's actually, I guess, what they're doing. So they can actually have a legal reason to seize them at the moment, or at least stop them from happening. And we'll see what comes of the Genius Act, because that's actually still being debated from
Hmm.
last year.
Yeah, there was another interesting story that we didn't include, but $61 million was seized in the States a few days ago regarding pig butchering schemes, where people develop trust over time, etc., and convince people to part and or invest in these fraudulent things. And basically, the FBI and Tether managed to track down a lot of these and freeze the funds. So it's getting there, but we need it definitely in law and in writing. Now, speaking about law and in writing, Trump's national cybersecurity or strategy plan pledges to support crypto and blockchain technology. Now, crypto industry executives are combing through US President Donald Trump's national cyber strategy after it was released on Friday, searching for hints about what it could signal for government support of the crypto industry. Crypto and blockchain are explicitly named as technologies be protected and secured. This is a first for any US cybersecurity strategy, says Galaxy digital head of firmware research, Alex Thorne. He said this on a post on Friday. Crypto and blockchain were mentioned once in the six-page report, saying, we will build secure technologies and supply chains to protect user privacy from design to deployment, including supporting the security of cryptocurrencies and blockchain technologies. Alex Thorne also pointed out to a section pledging to uproot criminal infrastructure and deny financial exit and safe havens. So this language, he says, could easily justify crackdowns on mixers, privacy coins, and unregulated off-ramps, he said. Now, Trump said that the National Cybersecurity is outlining his priorities for ensuring that America remains unrivaled in cyberspace. Artificial intelligence was also a key focus of the reports. He says, we will secure the AI technology stack, including our data centers, and promote innovation in AI security. Trump also emphasized the importance of recruiting the next generation of workers in the cyber workforce to design and deploy exquisite cyber technologies and solutions. So there are a bunch of bills being debated, as mentioned with the Genius Act and others, but there are some other no strategies and acts coming into play as well, trying to make sure that the US stays for first and foremost in terms of security, AI development, and a bunch more as well. So we'll probably have more on that story in the later weeks to come as well.
And another country that has been first and foremost for the wrong reasons in our recent reports, South Korea is in the news again, but this time it's slightly different. And they're actually trying to block firms from using USDT or USDC, which is really interesting. So, South Korean financial regulators do not want to let firms use their balance sheets to buy US dollar peg stablecoins like Tether or USDC. So, guidelines issued by the Financial Services Commission to the domestic crypto industry currently forbid exchanges from opening corporate wallets for South Korean firms. The FSC is ready to reform these guidelines this year following a lengthy wait. So, but firms hoping to launch USDT treasuries or US dollar pegged coins to conduct cross border trades are likely to be thwarted by the regulators' new rules. And the development will come as a major blow for South Korean companies who have been waiting years for the chance to make crypto investments. So, however, this draft remains under review, and the committee, it's actually at the committee stage, and the National Assembly will actually vote on this. And while lawmakers deliberate, the FSC is choosing instead to act. So interestingly, that they're actually stopping the US-backed stablecoins, and we'll have to watch that story because everyone else is opening up to them.
Absolutely. And as we mentioned in the past couple of months as well, the countries are looking at developing their own stable coins. So maybe South Korea will do that as well. But then it also minimizes the opportunity for companies to invest when you have Tether and USDC Circle as well. Now, one of the stories we have covered this in the past as well, and this is to do with Bitcoin miners. And you remember there was a company called BitDeer 2 weeks ago that we mentioned that had offloaded every single one of its Bitcoins. Now, since October, Bitcoin miners have offloaded 15,000 Bitcoin since October, with more sales expected. Bitcoin mining companies have offloaded a sizable portion of the Bitcoin reserves in recent months, signaling a shift away from the self-treasury strategy that dominated the industry during the 2024-2025 market upcycle. Now, according to the Energy Mag's Miner Weekly newsletter, publicly listed miners have sold more than 15,000 Bitcoin since October. That month marked the market's peak before a historic flash crash triggered widespread deleveraging across the industry. Several large miners contributed to the sell-off. The newsletter highlighted Kango, their February sale of 4,451 Bitcoin, equal to roughly about 60% of their reserves, as well as Bitdeer, which reportedly liquidated its entire Bitcoin treasury last month in Feb. It also pointed out to Riot Platform's multiple Bitcoin sales in December and Core Scientific's plan to roughly sell 2,500 Bitcoin during this first quarter of 2026. Now, Mara Holdings, some of you might know them, might remember them. We actually came across them at Bitcoin Vegas. Mara Holdings, the largest publicly traded Bitcoin mining company, drew attention this week after updated regulatory filings indicated it may both buy and sell Bitcoin to maintain flexibility and optionality. Mara Holdings currently holds more than 53,000 Bitcoin, making it the second largest public corporate holder of Bitcoin behind Strategy. Bitcoin miners' recent sales mark a sharp departure from earlier cycle trends when many companies adopted a de facto treasury strategy by holding a large share of their self-mined Bitcoin on their balance sheets. So what is that going to mean for the charts? Well, we'll trade what we see, right? Now, at the time of this, research from Digital Mining Solutions and Bitcoin Mining Stock.io suggested that holding patterns reflected expectations of further price appreciation. It also then coincided with efforts by several miners to strengthen their financial footing while expanding into adjacent businesses such as AI or AI infrastructure, specifically high performance computing and data center services. But industry conditions have deteriorated since October, with some observers describing the current environment as the harshest margin squeeze on record for mining companies. And we know that it's become more and more difficult for Bitcoin mining companies to make profit, especially with energy costs and all the other computing that needs to happen. So a lot of them are starting to let that go also because they might see that AI or AI data centers is more feasible. But if they're offloading, okay, we don't know what's going to happen. But it is interesting that that whole shift, as well as a lot of people's perspective on what was the 4 year cycle for Bitcoin, may no longer be relevant. We don't know where it's going. We trade what we see.
Mhm. And they're not trading what they see. They're actually we're probably trading what they are doing. But the New York Stock Exchange has actually just bought into a major crypto exchange. And the world's most famous stock exchange, which is the New York Stock Exchange, is no longer really sitting on the sidelines. They're actually putting their money where their mouth is. And their parent company, which is Intercontinental Exchange, ICE, has invested in OKX at a $25 billion valuation, which will take a broad seat. So ICE's investment amount, their actually investment amount is still undisclosed, but OKX will provide ICE with a live crypto price feed, and OKX users will gain the ability to trade tokenized New York Stock Exchange listed stocks and derivatives, with that feature expected to launch in the second half of 2026. So ICE is simultaneously building its own separate blockchain-based trading platform using stable coins for on-chain settlement and 24-hour trading. So OKB, which is OKX's native token, surged more than 38% on the news, extending what was an already massive 2025 rally fueled by a $7.6 billion token burn, which is about 50% of their circulating supply. So again, we have now the big players buying into the centralized exchanges. And this is the debate that we had quite a while ago about, is crypto going to be able to be decentralized anymore, or is it going to become really owned by a few different companies? So that will be interesting now that the stock exchange has gotten involved now too.
Absolutely. What was decentralized cryptocurrency becoming, like you said, centralized? Interesting times. Speaking of, with the last story, good news for New Yorkers because you can now pay for your mortgage with Bitcoin. Strike, most of you know this, is a Bitcoin-based payments platform, has received both a Bit license and a money transmitter license from the New York State Department of Financial Services, allowing the company to legally operate in one of the most tightly regulated crypto markets in the US. A Bit license is a special permit issued by the New York State Department of Financial Services that allows companies to conduct virtual currency business with New York residents. Introduced in 2015, the license is required for firms offering services such as exchanging, storing, and transferring digital assets. By obtaining the license, Strike can now provide its services to individuals and businesses across the state. So this app, Strike, built on the Bitcoin Lightning Network, is a technology designed to make Bitcoin transactions faster and cheaper. Through the app, users can send and receive money instantly, convert dollars into Bitcoin, and pay bills directly from their crypto balances. Strike users will also be able to buy and sell Bitcoin, receive salary deposits converted into Bitcoin, and make bill payments directly from their Bitcoin balances. That means homeowners could potentially use Bitcoin holdings to help pay recurring expenses such as mortgage payments. So let's see if they can do it in New York, where it's very strict over there. I'll be able to roll it out, and who knows? Maybe Stripe will come over the rest of the world as well and help us with that. But that's it. We need to be able to trade. We need to be able to trade safely. And before we get into that, what kind of mood is the market in? Are we still in extreme fear at the moment, Vicky?
That we are in extreme fear at the moment. And over the weekend, the fear and greed index did rise to about 10 briefly, but is now back down at 8, which is extreme fear again. And it was actually the same last week, Monday, which was around 10. So it really isn't moving much. Even with that little push that we had last week, it isn't really moving much. So people are still extremely fearful of where it's going. So let's just look at the charts to see what we can see on that.
Absolutely. So, yeah, last week, Monday, we were talking about the fact when you wanted to see at least the first close up above the 70,000, 71,000. That was fantastic. It was a great push. But then we started to see some previous resistance coming into play around that 75,000, 74,000 band, which we had mentioned a while back as being previous good support. And unfortunately, some heavy rejection. Who knows? Maybe some of the Bitcoin miners were selling off. But obviously, the geopolitical events over this last week has added fuel to the fire, but in a bad way. But at the moment, some good support being found in and around this area. What we're looking at for the rest of the week is a little bit of cautious optimism. I mean, there are calls for a further breakdown of below 64,000. But we're going to trade what we see. We're just expecting at the moment this band that's been here for a little while, around 68,000, is going to be providing some contention along with some downtrending moving averages. So what we need to see next is, again, a break above the 71,000 area. And then we need to clear, as mentioned, we need to clear 75, which was huge psychological support. Broke down. It's going to be some heavy resistance. So again, a little bit of a topsy-turvy week I anticipated, unless we're able to break through that 75,000. Then the market is going to generally follow with it, and we're going to start to see a lot more green. Bitcoin, coming back down yesterday, closing around 65,000. We're back up to about 68 at the moment, which is fairly positive. But there are a bunch of coins that just don't care what Bitcoin be doing. And a lot of these we've been trading with the HODL, been scalp trading these. Some of these we've been watching for weeks. Some of them we've been calling for ages. So those ones are really doing well. Those are doing HODL trades. Both those coins specifically have been able to get into good positions. I'm excited to catch up and see what the graduates have been doing with that. But some great scalping opportunities. But always do your research. But that said, there are a bunch of calls coming up for this week in terms of where people can jump on. If they're in the lodge or the den, they're in general Hodlnots, they've done courses. What all's in store this week?
Yeah, you're absolutely right. I mean, Bitcoin's going up, it's down, it's breaking resistance, it's finding support, and a lot of the coins do not care. It did affect the market slightly today when we had that dip. Everyone just went, ooh. But really, like you said, we've had some great calls in the den. We've had some really good hodl fire calls. So yeah, the market doesn't care. And the interesting or the important part is get on the calls in the lodge and on the hodl fire graduates call, because that's where we can all help each other find them. So in the lodge and the den this week, we have, as always, the 12 p.m. UTC call for our the students that are doing the self-paced course and are on chapters 1 to 3. So that's at 12 p.m. this afternoon or today or tonight, wherever you are. And then there is another self-paced course tomorrow at 10, which is, sorry, 10 March, and that's at 4 a.m. UTC. So that's for anyone doing the self-paced course on any chapter at all. So you can jump on that one. And then we do have a lodge call as usual at 6 a.m. UTC, and that is done by Wendy, and she always has a topic. So jump on that one, ask some questions. That's more scalping bent than hodl firing. But if you are scalping in the lodge, and especially if you're on the 3M challenge, jump on that and see what you can do there. And then on that day as well, on the 10th, which is the Tuesday, we have our Hodlfire graduates call. So this is everyone that's doing the or has graduated from the Hodlnots course. We all jump on. It is not a webinar, it's actually a call. So we can actually see each other, we chat, and we find coins. And gosh, we've found some fantastic coins over the last week and actually the last month. And we will be putting out a little summary of some of the calls that are happening, and just so you can see that HODLfire does work, and definitely what you learn on the course works, because we have been trading very safely but very successfully. So that's at 12 p.m. UTC on Tuesday. And then on Wednesday, we do have the first of the HODL dot calls, which is at 8 p.m. UTC on Wednesday night, which is for anyone that's doing the scalping challenge. So the 3M challenge. So jump on there if you're having a little bit of a challenge with the challenge and ask some questions. And then not a HODL not call, but it's the BTC token AMA is also this week. So that's on the 12th, and that's at 6 a.m. UTC. So if you are a BTC token holder, or you just want to know a little bit what's happening in the market and what's happening around BTC token, jump on that. That's 6 a.m. UTC on the 12th. And that is followed again by the second of the HODL dot calls, which is at 7 a.m. UTC. And as usual, we end the week with our self-paced course call at 12 p.m. UTC, and that's for chapters 4 onwards. So a little bit light on in the lodge, but really, as John said, don't, look at Bitcoin, see what it's doing, but there are so many coins at the moment that we can trade short term and a little bit longer term using scalping or the HODL fire. We just trade what we see, and it's actually working really well. Mm.
Absolutely. Looking forward to some of those calls this week, especially that Hodlfire graduates call tomorrow. But like Vicky said, look out for a little bit of a summary of some of the calls, coin calls that we've actually had and what they've done and what they're still doing. Because we're trading on the higher time frames. We're trading the trend of that coin, and these coins are still going. So more on that later this week. But as we jump into this week and wrap up this call, Vicky, what is our thought for the week to chew on?
Not really a thought, but that ball right there in the middle really says it all. And it's just a reminder to everyone that until this market sorts itself out, that is the only dip that you should be buying. So in the meantime, please just trade what you see.
Holy guacamole, that was funny. All right. Yes, that's the only tip you should be buying. Definitely
Yep.
avocados for the win. They're healthy, right? Fantastic. Well, thanks for being with us, a bunch of you. It is healthy on a Monday morning, kicking it off like this and setting the tone for the rest of the week. Until then, ciao, ciao, everybody.